Good afternoon and welcome to Sedgemoor District Council's Audit and Standards Committee meeting. I will now hand over to the Committee Manager, Mr. Taylor.
Good afternoon. Hopefully those present will hear the meeting. However, in the event of a technical failure, the Chairman will adjourn the meeting and set a new time for its reinstatement. Please note that the meeting is being recorded and a copy of the recording will be available on the Council's YouTube channel in the next few days. All members of the committee should have their video on, but should remain muted until invited to speak. If you wish to attract the Chairman's attention, please, where possible, make use of the instant messaging function. And the format of the meeting will be as per the agenda published. Over to you, Chairman.
Thank you. I'm now going to ask each committee member and officer who's taking part in the meeting to introduce themselves and confirm that they can see and hear me before we start the official business of the committee. Councillor Will Human.
Good afternoon, Councillor Will Human. I can see and I can hear you. Hopefully you can hear me.
I can. Thank you very much. Councillor Nick Bayliss. Councillor Hilary Bruce.
Good afternoon. Yes, Councillor Hilary Bruce, and I can confirm that I can see and hear everything. Thank you.
Thank you. Councillor Ian Dyer. Councillor Mike Facey.
Yes, good afternoon, Chairman. Councillor Mike Facey. I can see and hear. Thank you.
Thank you. Councillor Liz Levy.
Good afternoon. I confirm I can see and hear everything.
Thank you. Councillor Rachel Lilly.
I think she sent her apologies, Chairman. Just had that come through.
Okay, thank you. Councillor Alan Matthews.
Yeah, good afternoon. Alan Matthews. I can see and hear everything.
Okay. I know Councillor Liz Methney has given her apologies. Councillor Diego Rodriguez.
Hi, Chair. Yeah, I can see and hear you, but I got cut off by my laptop having restarted by itself. Don't know why. So hopefully I should be okay now.
Okay, thank you. Mr. Julian Taylor. Julian Taylor. Veronica Horman.
Hello, Chairman. Yes, I can confirm I can both see and hear you.
Thank you very much. And I know Jeff Lewis has sent his apologies. So I'm just going to go back through Nick Bayliss, Councillor Nick Bayliss, Councillor Ian Dyer, Councillor Liz Levy, and Julian Taylor.
So is this Councillor Liz Levy here? I am here and can see and hear
Thank
everything.
You. Thank you very much indeed. Okay, and now the officers. Alison Turner.
Thank you, Chair. I'm Alison Turner, Assistant Property. I can confirm I can see and hear everything.
Okay, thank you. Melanie Wellman.
Melanie Wellman sends her apologies, Chairman.
Thank you very much. David Johnson.
Grant Thornton have just asked for the link to be sent through to them. I think they're having a few problems.
I'm just doing that at the moment.
I think Steve's going to do that, Chair.
All right, so Alex Whaling will be the same. Alistair Woodland.
Thank you, Chairman. Yeah, I can see and hear everything. Thank you.
Thank you. Adam Williams.
Thank you, Chair. I can see and hear everything. Thank you.
Thank you very much. And Steve Taylor.
Yes, Chairman. Steve Taylor, Committee Manager. I can confirm I can see and hear. Thank you.
Okay, I'll just go back now. Has David Johnson joined the meeting? Alex Whaling? I'll carry on with the meeting and hopefully by the time it's their agenda items, they would have joined us.
Yep.
Apologies for absence, please.
Yes, Chairman. Apologies from Councillors Rachel Lilly, Councillor Lisa Methley, and Mr. Jeff Lewis. I think Julian may well be waiting in the gallery, but I'll just get him in. Thank you.
Thank you. Agenda item number 2, the minutes of the meeting of the committee held on the 24th of November 2020 and the 7th of December 2020. Are you all happy for me to sign these off as correct?
Yes, I'm happy.
Yeah.
Thank you.
Yes.
Is anybody not happy with the minutes? Okay, then I'll take those that have to be signed off then. Agenda item number 3, any urgent business?
Sorry, Chairman, I'm not aware of any urgent business, no.
Okay, public speaking time?
No members of the public have registered to speak.
Okay, thank you. And this is for the members of the committee. Are there any declarations of interest? Okay, thank you. Has the people from Grant Thornton joined the meeting yet?
It looks like Alex may well have joined. I'm still trying to get Julian in.
She has joined. Apologies, I was trying to sort my screen out so that I could actually see sales and actually see my papers as well. So apologies for being late. Couldn't find the invite.
Thank you, Alex. We're on your agenda item 6. Are you presenting or is it David?
I'm presenting. Yeah, I'm presenting on behalf of both of us. So hopefully, sorry, are you okay for me to start?
Yeah.
Apologies. So what you've got in front of you is an updated audit findings report, which apologies came to you quite late because obviously we're still working on the 1920 financial statements audit. What I wasn't going to do is talk through page by page because you will have seen quite a lot of the report at the previous audit committee. So I was just going to talk you through the key changes and as part of that give you an update as to where we are in terms of the audit. So in terms of where we are, so turning to it's page 3 of our report, which is the headlines, which is updated. So where we are at the moment, halfway down on the right hand side, you'll see that we say that the audit is, our work is substantially complete and there are no matters which we need to bring to your attention in terms of modification of our audit opinion, other than, and I'll talk a bit about the property, plant and equipment valuations and the pension fund investment valuations in a second. So in terms of where we're at, so we're just finalising some of the key bits of work around financial instruments and going concern. And as you're probably aware, we've been doing quite a lot of work around the council dwelling valuations, which when we started to look at them in a little bit more detail, which we've been required to do over the last year or so because of criticisms of external auditors, not just Grant Thornton, but all external auditors by the Financial Reporting Council on the level of work that we actually do around some of the estimates that are in the accounts. We've had to do more work and inevitably when you do more work, you find more issues. So actually looking at the council house dwellings has highlighted some issues around how they were valued in the 1920 accounts, and we did identify a material misstatement in the accounts. So following on from this this meeting, we should be able to get the subject to final conversations with Alison and her team. We should get an updated management letter from yourselves, and we are in the process of reviewing the final sets of accounts, and that's largely done. So if you just bear with me, I'll just make sure that I've got the right report in front of me because I'm not sure this is the one that I'm looking at is. So moving down the page, so we'd already talked to you last time around the value for money audit that we have to do, and we highlighted the fact that we hadn't identified any particular issues around your value for money arrangements that you have in place. So moving over the page, we talk about the provisions for Nndr appeals, and they're quite significant, the material amount that's actually in the accounts. And we, as part of the work that we did, we haven't identified any significant issues in this area. And so we've highlighted that as a green area in the accounts. And one of the reasons we look at that, focus on those areas, is again, it is an estimate. It's obviously providing for Nndr appeals is not an exact science. It is an estimate that's made by management. So obviously, potentially it's an area that we would focus in and look at, because it could be open to manipulation. But I'm pleased to say that when we did look at that, we didn't find any particular issues. Further down the page, then we talk about the council housing valuation, which I've previously mentioned to you. So when we started to look at this particular area, and we looked at, we used Gerald Eve as our expert on all things property, plants and equipment valuation. That seemed to highlight some anomalies between what you got in your accounts and what we were expecting. And when we did further work around that, it highlighted that, as I say, it looked like the value of the council house dwellings was materially misstated in the accounts. So we have asked for that to be updated, and management have taken that on board as well. And that amounted to it's about £25.5 million. So it's quite not an insignificant amount of money. The good news is, though, that it doesn't actually affect the bottom line of the accounts. It's a balance sheet adjustment. So from a sort of reserves or a cash position, it's not a major issue, but it's obviously one that we need to get right, and it's obviously one that we'll focus on in future years. So moving over the page, when we last spoke to you, I think we also had some outstanding issues around the valuation of other land and buildings, surplus assets and investment properties. And I'm pleased to say the majority of that work is now complete. Because obviously the council has quite a significant amount of investment properties, we did actually engage our own property expert to look at those valuations. And unfortunately, we were waiting for the report back from them, which I believe actually has come today, hopefully to David. So that's why he's not at the audit committee, because he's just hopefully finalising a few things. So we've highlighted a couple of areas around the valuation that we probably just want to bring to your attention, which is why we've assessed it as an amber area. So overall, no major issues, but just some areas to think about for the future. Over the page then, in terms of other responsibilities under the code, as I say, I don't think anything has particularly changed since last time we talked about that, so we haven't got anything further to bring to your attention. The action plan, on the first page of the action plan, again, was the same as the one that we brought to you back at the last audit committee, so nothing's changed on that. The page after, we have added in some additional actions, because obviously as a result of some of the work that we've been doing, it has highlighted a couple of some areas where perhaps the controls could be improved around certain things, like, for example, the council house dwellings. And I think it's just a case of perhaps just beefing up how that is actually documented, to give both the finance team, the CFO in particular, but also ourselves the assurance that actually those valuations have been done robustly for the future. So several new actions that we've raised in there around things like creditors. A lot of them we've assessed as low risk because we didn't see them as significant issues, but obviously we just bring them to your attention for information. Okay, so moving to page 11 of our report, which is audit adjustments, we have highlighted on there the issue around the council dwellings beacon valuation, which I've spoken about already, and we just bring that to your attention in terms of, so that you can see the numbers and the actual impact on the accounts as well. And then moving over the page, there are a couple of new adjustments as well, one around receipts in advance, which is £478,000. Again, from our perspective, not material, but we bring it to your attention. And also an adjustment around investment properties. Again, not material, but we bring it to your attention because I think what this is painting is there's perhaps some areas that need to be improved around the valuation of some of the assets going forward. We've also highlighted on the following page an issue around senior officer remuneration and just making sure that the council reviews the annualised salary of senior officers in the future. This is quite a common issue that we found in lots of places within the accounts, just how, particularly when people have left in the year, how you actually put that in the accounts in terms of for transparency. So I appreciate that was a whistle-stop tour of this report. I just wanted to highlight to you the key changes, but I'm more than happy to respond to any questions if there are any.
Thank you. Are there any questions, members, for Alex?
Yes, please, Chair.
Yes, sorry. Yep. Yes, Councillor Human.
I wanted just to an inquiry as to whether the difference in the property values was because of the inability to make accurate calculations that was found to be industry-wide, or whether it was just sort of catching up on what was old information hadn't been turned into new information. And what was the? Did you state the difference between the two?
So if we're talking specifically around the council house, the valuation, the difference is set out in the report. I think it's £25.5 million. Just trying to find the right page. It's certainly shown in the adjustments page, which is page 11 of the report. Yeah, so that's in terms of the council has the dwellings. So in terms of the valuation side of things, you've reminded me actually, Councillor Human, so thank you. I think right at the beginning I mentioned about the modification of the audit opinion, and what we will be doing in the audit opinion is drawing attention to the fact that because of COVID-19, valuations for property, plant and equipment were much harder to do, and actually the RICS guidance actually asked the valuers to actually put something in their valuation reports that highlights the fact that there was some uncertainty around the valuation of property, plant and equipment for 1920, partly because people couldn't go out and actually physically verify assets, and partly because I think there was concern around how the property market would actually respond to COVID-19. So we will actually, and the council have drawn attention to that in their accounts, the fact that there's this uncertainty, and we will be drawing that to the reader's attention in our audit opinion. There's also a similar emphasis of matter as well in the pension fund investments that have come through, so we'll highlight that because obviously lots of pension funds actually invest in properties, and clearly there's an equal knock-on effect in terms of those. So that's that side in terms of the difficulty of actually valuing the assets. I think in the terms of the council house dwellings, I think it is more a case of our expectations around when we're looking at property, plants and equipment valuations, our expectations have been ramped up quite considerably over the last year or so, and as partly in response to, as I say, the Financial Reporting Council's requirements of us as auditors to look at those valuations, as I say, because they're big estimates in the account. Those and pensions are the two big estimates in the accounts. So quite rightly, our expectations on management have increased quite incrementally. And therefore our expectations in terms of the working papers to support the figures in the accounts have increased. And I think it'd be probably fair to say that perhaps in the past we've not really challenged valuers as to where they've come up with their figures, and we've, they're the expert at the end of the day. Very much it's changed now in terms of the onus is very much on, well, both on management in terms of challenging the valuer, but on us as well to challenge the valuer as to how they've come up with their figures. Does it look reasonable? Does it accord with other information they know about their own indexations that are local, national, etc. So I think there's two things there around the council house dwellings, and I think it's a similar message around the investment properties as well and the land and buildings.
Thank you.
Thank you. Tim Mander, you'd like to ask a question?
Oh, thank you, Chairman. I'd actually quite happy to sort of try to explain the situation with regards to the council house valuations. We own about 4,000 council houses, and obviously as a result, we can't value every single one. We do a system called a beacon values, where you group together properties in beacons. So you have about 30 across the board properties from one bedroom flats or bed sits to 3-4 bed semi-detached properties, and you group properties in those beacons. So every sort of 3 or 4 years we do a revaluation of each beacon property, and then that's how and then those properties grouped together are all added up, they're given that value, and then the total is arrived at. The problem is we haven't reviewed that for 3 or 4 years. We then use a regional indexation from the Nationwide Building Society of property price rises. In the last couple of years, that regional indexation has been very low, almost minimal, about 1 to 1.5%. So we haven't reviewed our figures. However, this was queried by the audit, the Grant Thornton. They looked at that. So we went through the whole process again, and what it really picked up is the fact there's been quite a large, what I describe as a Hinckley factor, where certain property prices have actually gone up a lot above the sort of regional indexation. So this was picked up, and 25 million sounds a lot, but that's 25 million out about 350 million, I think it was, something like that, the total valuation. So, but certain properties had gone up quite a lot, and these weren't reflected in indexation. They've gone well beyond the indexation. So it gave us an opportunity to look afresh at every, what we call beacon property, and for benefit, having benefit of hindsight now, it was a useful exercise, but it did see a larger increase than what we were expecting. So that's really where we are.
Thank you for that. Councillor Bruce, you've got a question?
Yes, thank you. If I understand correctly, we've been asked to just note the activity today. Can I just ask, are we actually at the point where we're signing off the accounts now from 1920? Is that an appropriate question for here today? Sorry, if not. But...
It was a question I was going to bring up at the end of agenda item 6 anyway, because we have to approve the, as you say, the progress report, but we have got a letter of representation that we have to approve today, and this was sent out by Steve Taylor this morning in an email. And I was going to ask Alex, once this is signed, that is the account signed off?
Well, I think it's a really great question from Councillor Bruce, first of all, so it's very fair prompt. I think there was some confusion on the agenda as to, was this a progress report, or actually was it the updated audit findings report? So apologies if we hadn't made that clear what this was. In terms of the audit, so I would say in 98% of it is now done. There's obviously always a little bit to do in terms of just making sure that we've got our, the I's dotted and the T's crossed, etc. The letter of rep, as you say, is coming to you for information and hopefully for your approval if you're happy with it. and then you can sign it. And then in terms of what we just need to do the last few checks, and then I'm hopeful that we can give the opinion in the next few days. And I appreciate this has been a very long process, a very painful process, as it has been at a number of different local authorities this year for a variety of reasons, particularly COVID, I have to say. And I'll be glad to see the back of the accounts as much as I'm sure Alison will be too, because I know she's been very keen for us to do it. So I'm really hopeful, though I won't be able to sign them today because there's just a little bit too much on the file. That's why he's frantically clearing it, hopefully, as we speak. But I'm hopeful that the next day or so I should be able to give the opinion on the accounts, and then that will be it, done and dusted for this year.
Yeah, because it has been a long time coming, hasn't it? Because when you came in December, it was only going to be a few more days then, and we're now in February and we've got the same thing. Oh, it's only going to be a few more days. So as chairman, it does concern me that we haven't had the account signed off, seeing that our finance team worked very hard to get everything done by the allotted time. With regard to the letter of representation, Alison, do we still go on with that, or do we leave that for what?
Thank you, Chair. I would suggest that we do sign it off today on the basis that we sign that off, and as Alex has said, next couple of days the work will be complete and the audit opinion will be issued. So if we sign a letter of rep today, then we're ready for the audit opinion to be issued as soon as possible. And as Alex said, I'm sure Grant Thornton would be glad to see the back of us as much as we're glad to see the back of you. No offence. Tim's laughing there in the background. But you know, we're as Grant Thornton are as well, I'm sure we're looking at starting work now for preparing for this year's set of accounts. So we really need to have some closure on last year so we can move on. So that would be really good for everybody.
Okay, I know Julian Taylor would like to ask a question. Julian.
Yes, a very simple question. I apologise, I couldn't come in at the beginning of the meeting. I'm sure I think there was a technical issue, but we talk about valuations of properties, and I don't know whether you've already covered this, but I'm thinking about the properties that are the commercial properties, which are council investments, and I wondered whether the fall in value as a result of what's happening on the high street, whether that is reflected in the accounts.
Who would like to answer that question?
Sorry, me again, Chairman. Well, obviously the data valuation was the 31st of March 2020. Right. So it really was before the full impact of COVID was known. And in fact, I think we put a small paragraph warning that we maybe something that has to be reviewed, obviously, in the forthcoming financial year. But as of last year, really, we had no indication of what the likely impact would be.
Can I come back and ask through you, Chairman, is there any guesses or likely knowledge of what the impact will be on this year's accounts and on the council finances?
Do we know what the impact's going to be on that, Tim?
It's very difficult to anticipate at the moment because obviously we've been fortunate. We took a sensible approach to our investments. We spread the risk. We kept low risk sort of acquisitions. So we've been quite fortunate, and a lot of our acquisitions are in the sort of the food retail side of being able to, companies that have been able to continue to trade through the various lockdown restrictions. So we have been quite lucky. There may be a slight impact on one or two, but I can't really anticipate what that'll be yet. But I don't think it will be a huge hit on the value of our assets that we've acquired.
Thank you. Alison, you would like to make a comment?
No, actually, I put that on before I got a chance that you asked me to comment anyway, which was helpful. Thank you.
Okay, so members, can I, as I say, we note the report, but are you all in favour for the letters of representation to be approved and signed off? Is there anyone against? Anyone abstaining? So we can take that as yes, it's approved. Can I just ask Alison that I am kept in the loop to know when the accounts are actually signed off, please?
Yes, absolutely. Yep.
Okay.
I'll be celebrating. You'll hear me celebrating.
And perhaps I can advise committee members of that as well.
It's like I will be able to hear you. Okay. Thank you, Alex, for that. And as I say, thank you. Now we'll move on to the internal audit progress report, agenda item number 7. And I believe, Alistair Woodlands, you're going to present for us.
Yes, thank you, Chairman. Yes, I will. I'll just give a moment to make sure members have got that paper in front of them. So this is our progress report. It's a report for members to note. Basically, this outlines progress against the annual plan. We highlight any significant risks or issues that have been identified through our work, and we also bring to your attention any changes to the audit plan that has occurred. So if you have our report in front of you, if you could scroll to our page 3, this summarises the work we've completed since your last update at the end of November. And what you see is the title of the audit and the appropriate assurance rating that was given. So again, in terms of assurance ratings, we have 4 main ones that we use: no assurance, limited assurance, so those are adverse, that means there's urgent action that needs to be done to improve the control environment. And then reasonable and substantial, which means the controls that we've seen in place should manage the risks to make sure that the ultimate objectives of the review in question that we looked at will be achieved. So if you move down onto page 4, the good news is through the work we've completed, there's no significant risks that I need to bring to your attention. So when we undertake a review, as I said, we do look at the significant risks in those areas and how well the controls are working. And if we've tested the controls and have concerns that those controls aren't effective, we would highlight those risks to you. There is nothing that I need to bring to your attention based on the work that we've completed as shown on page 3. And as there are no adverse opinions as well, there's no details that I need to bring to your attention on the adverse opinions. If you move down to our page 5, this just gives an overview of the plan position to date. Ideally, we'd be a little bit more through with the work not started. So again, we started in Q4. We would hopefully be looking at around 25% not started or just under, slightly over, maybe by 1 or 2 reviews. Main reason for that is being reactive and because of COVID. So things have taken slightly longer, and I know it's something everyone's experiencing probably across the country, but certainly in local government, I know other audit firms as well are experiencing those sort of issues. So the one thing to cast your eye over, which is on page 6 and goes down onto page 8 and 9, is changes to the audit plan. So there are a few changes to be aware of, and the reasons for those changes are listed below on each one. The main reasons that we've had to make some changes to the plan are in terms of risks that the authority is facing. You'll probably notice that we've brought in a lot more reviews around making sure that what the impact of fraud has been on the authority and making sure the anti-fraud controls are working effectively, as well as doing some work to help around the risk assurance assessment for fraud, which all authorities should have in place. So moving on to page 9, the overall conclusion here, there's a couple of things I just want to bring to your attention on this page. The first one is just around Cfr guidance. Cfr issued a guidance in November just talking about the impact of COVID on internal audit and where internal audit resources had been redeployed to help with the payment of grants to businesses or other frontline services, because obviously local authorities were struggling for resources and had to redeploy staff. And where that has happened, it meant not much work would have been undertaken to provide an annual opinion, because obviously we have to provide an annual opinion on how well governance, risk and control is working in the authority. That's what all our individual audits build towards. What I can say is that the work that we've undertaken to date and the work that we plan to do means we will still be able to offer a full annual opinion for you on how well governance and risk and control is working across the authority. So that is good news. The other points on here I'd just like to draw your attention to continuous audit planning. Obviously, there's a lot more uncertainty in the world, and you can see by the number of changes in our audit plan that there are lots more changes being made because as things go out in time, there is a greater level of uncertainty. So we will be looking to formalise our kind of continuous audit planning process. So every quarter we'll be looking to do more of an exercise on what are the priorities for the forthcoming quarter. And I'd also like members of the audit committee to be involved in that. So I will be looking to make sure I send out some regular communication to you guys as the audit committee that what your views are on the priorities from a governance, risk and control point of view. So again, just to re-emphasise your roles as an audit committee, you're here to provide assurance to the full council that matters of governance, risk and control in the authority are working effectively. And again, as members of the audit committee, you can get that assurance from many sources, of which one key independent assurance is through internal audit. So our annual plan is quite important, which would bring me on to my final point, which is we are looking at pulling together the annual plan for next year. So I will be emailing all of you this week to kind of feed in your views on what the priority areas are from a governance, risk and control point of view. So if you think of everything a local authority does, it is covered in some shape or form by some sort of governance framework, risk management process and internal controls to manage those risks. So I'd appreciate your views on what you foresee as the highest risks and key areas that you as a committee want assurance on for Sedgemoor District Council, and for that to be reflected in our audit plan. And that plan will be coming to your committee for approval in March. There will be some timescales I'll put on that. So the final sections in our report, which is worth just casting your eye over, which is on our Appendix B, page 12, 13 and 14. That just shows you the annual plan for the year. So as I mentioned, we have to produce an annual audit opinion on how well we think control, governance and risk is working in the authority. It will be based basically on all the reviews that we've undertaken in this plan. And there you can see the individual audits we've undertaken, what assurance rating we gave and the number of recommendations that were made. So that's a kind of quick overview of our report, and I'm happy to take questions from members.
Has anyone got any questions, members? No? Okay, well, thank you, Alex, for that. All we have to do on that one is to note. So no vote is required on that. So thank you, Alex. And yes, we're sorry, not Alex, Alistair. We will get our thinking caps on for the rolling plan.
Yeah, thank you.
Thank you. Moving on now to agenda item number 8, which is the overdue swap actions. And can I ask Simon Tandy to present, please?
Yes, good afternoon. Thank you, Chair. Just a very brief overview from me. There are currently, or at time of reporting, there were 3 actions which were classed as high level and overdue. One of which falls to Homes in Sedgemoor under the housing rents audit. We have Rob Jones present to explain about that one. And then the other 2 come from the Somerset Independence Plus Partnership Governance Advice audit from August 2019. We've had a look at these before in the past. I believe that there's some good news about that one, but I won't steal Mr. Baxter's thunder. He will be explaining about those 2. So unless anyone has any questions for me, I will hand over to Mr. Jones to run you through what is happening with Housing Rents 2.1.
Thank you, Simon.
Thank you.
Okay, then we'll look forward to Rob Jones, if you could actually present for us, please. I can't hear you.
No, you're still very quiet, Rob.
Rob, your mic's on your head. Bring your mic down.
Sorry, everybody. Can you hear me now?
Yeah, we can hear you now.
Apologies.
Thank you.
I'm still learning with Teams and remote working. The annual housing rent audit was completed by SWAP in the autumn of 2020. Prior to that, we had, in conjunction with Sedgemoor District Council, moved to a new cash receipting system, which enables customers to make payments for any of the income streams that the council has, including housing rent. The interface between the new cash receipting system and open housing didn't function particularly well in the first few months of the year, and it led to lots and lots of complicated transactional issues between the two systems, our open housing system, which monitors housing rent, and the cash receipting system. So at the point that we actually interacted with Swap to do the housing rent audit, there were a number of outstanding reconciliations in regard of cash, because we were still trying to unpick where the interfacing was going wrong and to put it right. We set ourselves a target of getting up to date with our reconciliations of the end of December 2020. I think in retrospect that was possibly a slightly challenging date to aim for. We are currently reconciled to the end of August, and I'm anticipating being fully reconciled and up to date by the end of February. So we would have every reconciliation up to January 2021 completed by the end of February.
Okay. Are there any questions, members? No. Okay. I would like to do actions for each one separately, because there is the Somerset County one has been going on, as we know, for quite some time. So I propose that we note the reason for the slippage and agree a revised deadline as presented by the responsible officer. So shall we say by the 31st of March? Is everybody in agreement with that, or would you like it the 28th of February? Hello, can someone confirm which dates they would prefer?
I think March is reasonable.
Reasonable. So we'll put down for that action 31st of March. Thank you very much for that one, Rob. Now we'll move on to the big one, which is the County Council item, which is, I'm just getting up, just bear with me, 1.2. And we've got David Baxter, sorry, 1.1 and then 1.2. We've got David Baxter presenting that for us.
Yes, thank you, Chair. I'm sure committee recognise these by now. The good news is we received a signed legal funding agreement at the end of last week, and that was signed off by council side this morning. So action 1.1 is completed. Action 1.2, as indicated by the notes, we've taken that action off Somerset County Council's hands, and we have undertaken to draft an accompanying terms of reference to management agreement ourselves. We've produced a draft. It's currently with Chris Trevelyan in Somerset Independent Plus to add some service standards. So that will certainly be completed by the next Audit and Standards Committee and should be agreed and signed within the next week or so by all parties. And I hope the county don't take as long to sign this one as it did the last one.
Right. Okay. So have you got, has any member, sorry, I gotta get my teeth in. Has any members got any questions they would like to ask David? Because I believe now, seeing we've had some response, that we ought to go for A again, note the reasons for the slippage, and agree a revised deadline of the 31st of March for it all to be signed off. Are members all in agreement with that?
Agreed.
Agreed.
Okay, thank you for that. And thank you, David. It's been hard work for you, I know, but we've got there in the end, or you've got there in the end.
Thank you, Chair.
Okay, thank you. So we'll now move on to agenda item number 9, Treasury Management Strategic Statement for 2021-2022, and I hand over to Alison Monteith.
Hi. I'm going to present you the Treasury Management Strategy Statement because it's quite a big document. I will try to present my screen so that I can take you through it because I think that might be a little easier. So hopefully you can all see the executive summary page. Is that right?
Yep. Yes.
Cool. Okay, so the document in front of you today for approval and then recommendation onto full council is the Treasury Management Strategy Statement. So this covers our investments, our borrowing and our minimum revenue provision. I will summarise the main points and take you through some of the tables, and then I can take any questions that you might have. I'm not going to go through it paragraph by paragraph because it's quite a big report. So our Treasury advisors that we use are Arling Close Limited, and they help to make sure that our strategy covers everything that it needs to cover. And they've also provided the external context that's in paragraph 3. So there's lots of economic background that I don't dig too deep into because I don't understand any of that stuff. They talk about the credit outlooks, and they, most importantly for me, they give us interest rate forecasts so that we can make decisions based on that. So in paragraph 4, we've got the local context. So that's a little bit about us. So I thought I would just explain this table to you because you don't see these figures very often and you might not remember what the capital financing requirement is. Sorry if you do, and I'm going back over it, but it's probably easiest if I just do go back over it. So our capital financing requirement is shown here in the table, and I've highlighted 31st of March 20, so that's an actual and then a forecast for the 31st of March 21. The capital financing requirement is the amount of money that we have, in theory, borrowed, but we're not necessarily physically borrowed. So we may have purchased a piece of land or equipment and we've financed it by borrowing, but we may not necessarily have gone out and taken a loan out for that borrowing. So if I explain this table to you, you'll understand what I mean. So we've funded something by borrowing, and it adds into our capital financing requirements. So that tends to get bigger and bigger. So you can see at the end of March, we'd financed £116 million, just over, of capital works by borrowing. However, our actual external borrowing, our loans, was less than £100,000. So basically what we've done is borrowed internally from our own funds, from cash flow, from revenue reserves, in order to avoid £16 million worth of borrowing. So that's what I mean by we've gone out and bought something, funded it by borrowing, but not necessarily actually borrowed. And this is where Treasury management comes in, because we have to decide when the right time to borrow is and when the right time to use our investments instead is. At the end of March, we had almost £36 million worth of reserves across the authority. The internal borrowing that we used here, £16 million, meant that we had a working capital of £19 million. And that's just a balancing figure at the end of the year, because we want our borrowing requirement to be nil, because we've borrowed everything we wanted to borrow. But you can see the forecast for the 31st of March 21 is that our total capital financing requirement is likely to be around £128 million. Because of some borrowing I've already arranged, forward borrowing, we are likely to have £105 million actually borrowed at the end of the year. So our internal borrowing will be £23 million. If we look at what we think our usable reserves figure might be at the end of the year, and that's a worst case scenario, knock off our working capital, we need about £10 million for sort of cash flow, and then knock off what we're borrowing internally already at the end of the year, you can see that we've got an external borrowing requirement potentially for an additional £14 million. So what that really tells me is that today I could go out and borrow £14 million to externalise some of our CFR. Predictions going forward is that our CFR will go up a little bit. Our borrowing, external borrowing, is likely to go up a little bit as our revenue reserves start to reduce. Because if we have less revenue reserves, we've got less internal borrowing that we can take advantage of. And I'm predicting that by March 24, we will have totally externalised all of our borrowing, all of our CFR. So everything that we funded by borrowing will actually be borrowed by the end of March 24. That will leave us with some reserves, some working capital, and no borrowing requirement In order to get to that position, obviously I will need to take out between now and then £50 million worth of borrowing. So our strategy needs to take account of the fact, when's the best time to do that borrowing? Do we lock into low interest rates now, even though we don't necessarily need the money, or do we leave it until later on, or do we borrow a little bit every year? And that's the basis of Treasury management, is making those types of decisions as when's best to do borrowing and to place investments. So our borrowing strategy, as you can see from that table, and as I've just said, is about securing low interest costs and achieving certainty on those costs. So at the moment, I can borrow relatively cheaply from the PWLB, but for longer terms. So I would achieve certainty on that borrowing, but I can also borrow really cheaply on very short-term borrowing. That doesn't give me much certainty because it's very short term, and when I come to borrow again, interest rates could have gone up. So it's a bit of a juggling act as to, do I take out really cheap borrowing now and just keep rolling that over as long as rates remain low, or do I fix out a slightly higher external borrowing cost, but for 30 years, so I know I'm achieving certainty over those costs. The strategy allows myself and the Section 151 officer the ability to take appropriate action when we need to. So if we can get some really low, longer term interest rates, the strategy allows us to take advantage of those. Although it is saying at the moment, we will try and keep borrowing short and very cheap. The strategy takes you through the different sources of borrowing. We tend to borrow through the PWLB or from other local authorities because we can borrow very cheaply at the moment from other local authorities because they're not getting very good interest rates anywhere else. There will be the potential next year to look into maybe some longer strategies for borrowing, and we'll work with Arlene close on that. So our investment strategy, the objectives of that is between looking at risk and return, so minimising the risk of incurring losses from our investments, but weighing that up against the risk of receiving unsuitably low investment income. So for example, we can invest in really risk-averse money market funds, no risk at all in those, we will get our money back. But the interest rate on that is ridiculously low at the moment, so it's practically nothing. Obviously, if you put money out for much longer term, you are taking a bit of a risk on that capital, but you're achieving a much better interest rate. So for example, our pooled funds, where we've got money put out for basically it's for the long term. We can recall it at any time, but the idea is you put it out for a long term so you don't lose any of your principal. And we're receiving, between 3 and 8% probably on those pooled funds. But there is a risk because the capital value does drop in the first year that you purchase it because of the costs, and they are obviously unstable capital wise. Over the longer term, we'd expect them to increase in value. There's a little paragraph here about negative interest rates. This has been advised to us by Arlene Close to include this. So obviously because of COVID-19, the Bank of England is predicted to potentially go to zero on the base rate or even below zero. If banks do set negative interest rates, they can't pay negative interest, so the value of your investment will reduce. This would be really difficult for us, obviously, because we don't want to lose the value of our investments. So we'd have to consider how we would deal with negative interest rates. What we are doing at the moment is not borrowing when we don't need to. We're using our internal investments as much as possible. So we're keeping the amount of money invested short term as low as we possibly can. So we're at the smaller risk of negative interest rates as we can be. The strategy shows the improved investment counterparties and limits that we put on those. The time limits of the counterparties have been suggested to us by Arlene Close, but the absolute value limits have been set by us. None of these limits are recommended to be increased this year. So these limits are the same as they have been now for a couple of years. I don't intend to go any higher than £5 million with money market funds, and £8 million we have in a strategic pooled fund. It talks about credit ratings and the type of people we can invest with. We tend to invest in very secure money market funds for our cash flow money. We can get that money back every day if we need it. Pooled funds are our longer term funds that we invest in, and we sometimes can put money out with other local authorities if we need to just put something out in a relatively short term. The risk assessment and the credit ratings are all provided by Arlene Close, and we get daily information on credit rating changes if applicable. So there's no risk of us putting money out with a bank that is on rating watch negative or credit watch negative. There's a lot more information in here provided by Arlene Close, which I won't go through, about the different types of things we can invest with. There are some more limits that we set here. Again, I haven't increased any of these limits from last year, so these should be familiar to you. So then we'll have a quick look at the Treasury Management indicators. So the indicators are set in the Treasury Management strategy now, and then the actuals against these indicators are presented during the year. So our first indicator is about credit risk, and we set a target portfolio credit rating of A. That's a very easy target anyway for us to miss, because at the moment we're just really using money market funds and they're all AAA rated. The liquidity rate risk indicator is about not having too much money liquid, so you're not getting very good interest rates, but having enough that you can call on if you need to. We've set the total cash available within 3 months, apart from our cash flow money, as £5 million, and that is quite low, but that's because the 3-month money is paying a dreadful rate of interest at the moment, so we don't feel we need to keep any money out in that 3-month area. The target is 5 million as a maximum. We don't have any at the moment. The maturity structure of our borrowing is it's a risk indicator that shows if we are at risk of having to pay lots of loans back in one sort of time tranche, and therefore being at risk of whatever the interest rate happens to be. So if in 5, 6, 7 years time interest rates are sky high, if we've got a lot of our debt maturing then and we have to borrow again, we're at risk of really high interest rates. So we wouldn't want to have all of our money put out, all of our borrowing put out within those timescales. So really what we want is a nice kind of even spread. We only want 30–40% mature at maximum maturing in any one particular year. We also set an indicator about principal sums invested for periods longer than a year. So if you invest now and you'll go in 2 or 3 years time in advance, it might be that you're missing out on some really good interest rates. So we put a limit on our principal that we won't invest it beyond the year, basically beyond the year end. We don't have any of those short to medium term investments at the moment anyway, but it's just something that we need to have in our strategy. So it's something I can refer to if I do need to do something like that. Again, the related matters is information provided by Arlene Close. So I'm not going to go through all of that. The next thing we need to have a very quick look at is the minimum revenue provision, the policy statement for next year. So the minimum revenue provision is the amount of money that we have to charge to revenue every year, basically to pay back an instalment of our debt. So our capital financing requirement that I explained to you at the beginning of the year is the amount of notional borrowing that we've got for capital. Well, that notional borrowing, although my loans tend to be maturity loans, so therefore you don't pay them back until the end, so you might not pay it back in 30 years. It's not prudent to just borrow and not make any repayments towards that. So the minimum revenue provision is a statutory provision that we have to make towards repaying that borrowing. It's up to us to decide how we calculate that MRP, but it has to be prudent. I'm not recommending that we change how we assess MRP, as I believe that we are paying the minimum prudent amount that we can pay of MRP. So essentially, on any new projects that are funded by borrowing, whether we borrow or not, MRP will be determined by charging the expenditure over the expected useful life of the relevant assets in equal instalments. So basically, you're setting aside MRP in the same way as you would be paying depreciation on an asset. So by the end of that asset's useful life, you should have repaid any associated debt. We need to also talk about where we make capital loans to other bodies for expenditure. So where we do that, we won't set aside MRP, but any capital receipts generated by the annual repayments of the loans will be set aside to repay the debt. So that is in effect the MRP being whatever they pay back to us in capital, we are paying off of to reduce the CFR, which is in effect MRP. So just the final table that we'll have a quick look at then is the CFR and the MRP. Hopefully that this will give you an idea of how much we're having to set aside every year because of our capital decisions. So our estimated CFR, capital financing requirement at the end of March 2021 is £72 million for the general fund and £56 million for the HRA. The general fund includes our commercialisation agenda. The estimated MRP that we'll have to pay back is just over 190,000 for capital expenditure previous to the current regime. So that's really old capital expenditure. The newer capital expenditure since 2008, we'll have to make an MRP of £1.2 million, and for the loans to other bodies, it's £600,000. So the general fund revenue account pays just over £2 million a year in MRP. So that's a big chunk of money, and that's because of borrowing decisions that we've made. The HRA, and it's just a statutory anomaly really, the HRA does not have to make MRP provisions. So the HRA can basically borrow and never make revenue provision to repay that. We could make a conscious decision to do that, but why would you? I think you would. So the HRA pays no revenue towards its borrowing. That's the end of the report. So if you've got any questions, I'd be happy to take them.
Have any members got any questions they'd like to ask Alison? Councillor Wheelhuman?
Right, just unmute. Just two quick ones. We're getting feedback, which is horrible.
Sorry, I'll mute my mic because it might be coming from my.
Hello, is that better? Yes, that's better. I can't hear anything now. When you talk about the borrowing decisions, making a borrowing decision, do you actually refer to Arling Close beforehand, or do you sort of make the decision based upon your understanding of the way interest rates are changing, because you talked about short and long-term borrowing decisions? And the second one is on the low interest rates. I know how difficult it is for you to establish any form of return on cash, particularly currently. Can we reintroduce the ideas of considering platforms such as Flagstone for some of your cash that might help you to be able to shop around instantaneously for better rates across a number of different banks all in one go?
Okay, yeah, so the first question about borrowing decisions, yes, we do take advice from Arlene Close on whether it would be a good time to borrow. Obviously, the decision about whether we should externalise borrowing and take the hit on the revenue account or leave it till a bit later is our decision to make. So, you know, Arlene Close can't really make the decision, but they can advise us on whether it's a good time, whether interest rates are at their lowest point, potentially. I mean, they're only guessing as well, an educated guess. So yes, we take Arlene Close advice before we then get together and make the decision about what's right for our revenue account and our long-term strategy. Low interest rates, the way we're combating that is to try and keep as little as possible on call. So we try not to keep funds on call at the moment. It is quite difficult because the government has been giving us lots of grants to pay out for COVID. They have actually been paying a lot of that money really early and upfront. So we have had quite a lot of cash knocking about. We could potentially look at using something like Flagstone, but the idea is that we don't keep money out with banks in the short term or with anyone. We've just got money market funds that we can dip into day in and day out, because our balance can fluctuate from, you know, one day we can have 10-15 million pounds, and then the next day we have to pay the precepts out, we have to pay the Nndr pool, we pay the salaries, and we're down to about £1 million. So we need to have at least £10 million on call at any one time, and our aim is to only have about £10 million in money market funds. But I will have another look at Flagstone and try and consider where that could be useful for us.
Yes, Councillor Wheelman. Is that all right?
Yes, thank you. That's answered very well. Thank you.
Okay, Councillor Hilary Bruce, you have a question.
Thank you, Chair. A couple of things, really, just queries. The estimated CFR is at the 31st of March. When was the estimate done? Is that an up-to-date estimate? And then the other question was in terms of the risk of negative interest rates. We were looking at the your table, which was on page 9 of the approved investment limits. You say those haven't changed. Do any of those need to be reduced to take into account the risk of negative interest rates?
Okay, thank you. Firstly, the CFR at the 31st of March 2021 has just been updated. So that is the latest one that I've got. So that's based on the work we're doing on council tax and rent setting. And the most up-to-date capital figures that I've got. The CFR, an estimate of it changes all the time. So somebody could come to me tomorrow and say, we've got a brilliant capital plan that's likely to go in next year. And obviously that throws the CFR out completely. So, but that is the most up-to-date figure. That's what I would expect at the moment. The CFR going forward, 22, 23, 24, obviously that's much more likely to change. And it's just an idea of, just gives you an idea of where the CFR is going, really. About the negative interest rates, so the table you were looking at was investment limits, yeah?
Yeah.
Sorry, it took me ages to get up there. Yeah, so the reason a lot of these investment limits are there is because with the money market funds, we've only got 4 money market funds at the moment we can use. Last week we only had 3 because one of them we weren't allowed to use. Yet we had about £20 million of money that we needed to put somewhere. If I reduce the limits on the money market funds, then I'm not going to have anywhere to put my cash. I'm just going to have to open more and more money market funds, which I can do, but the interest rates are not really any different between them. So having 5 million with one or having 3 million with 2 separate ones is not really going to change the interest rate that we've got. So I think we've probably got the right amount of money market funds. With the others, to be honest, if you're going to put money out with a bank or building society, often you get the better rate. If you've got 5 million, it is sort of like a trigger point at which you get a better rate. So I wouldn't suggest reducing any of those. Obviously, we don't, that is a top limit, so we don't have to put that sort of money out. And often we would only put out 1 million or 2 million, depending. So does that answer your question?
Yeah, that's great. Thank you.
Are there any more questions, members? Okay, so we have to approve one, the Treasury Management Strategy for 2020-21, the Annual Investment Strategy for 2020-21, the Minimum Revenue Provision Policy Statement, and the Capital and Treasury Prudential Indicators. Has anyone abstaining from that? So are we all happy for that to go through to council? Okay, so we can take that as read that it's been approved. Thank you, Alison, for your presentation. It was very informative. Thank you.
Thank you.
And now we'll go on to agenda item number 10, the Senior Pay Policy Statement for 2021. And I'd like Helen Thomas to present for me, please.
Thank you very much. This is the annual senior pay policy statement, which we are required to publish every year by the 31st of March. It looks at the ratios between the most highly paid officers and those of the most lowest paid officers to make sure that the differentials are within the tolerance that the Hutton report suggests. So if you have a look at through the report and through the appendix there, you will see that our current ratio is about 1 to 4.5. That is up slightly on last year, but the reason for that is that when it was published last year, the chief executive wasn't yet at the top of the pay scale, and she is now, or she was at the 31st of December. So that's the reason for the difference there and why it's increased from last year. That will show a decrease next year, of course, when we've got the new chief executive in place, and he's obviously gone in at the bottom of the pay scale as at the end of January. It also details in the report the number of staff who have staff recognition payments. As at the 31st of December, there were 6. Some of those were in the benefits service, which have now gone away due to other reasons. None of those are paid to senior officers, though. Those are all a bit further down the chain. And there are some market forces payments in place in building control. Those were the same as last year, and those remain in place. The reasons for those remain in place, and therefore the payments themselves remain in place. So we are required to publish this by the 31st of March. That is a mandatory guidance, a mandatory requirement, and this needs to then go to full council for approval by the end of March. So you'll see some recommendations there. One is to approve the pay statement for this year, and a pay policy statement, sorry, and one is that we publish within those mandatory guidelines.
Thank you for that, Helen. Are there any questions, members? No? So can we take a vote on it then? Is there anybody against the recommendation? Anybody what's the word? Let's go on.
Abstaining.
Abstaining, sorry. Against this. So I can take it then we are all for the proposed recommendation. Thank you very much for that, and thank you, Helen, for presenting to us.
Thank you very much.
Unless there's any other questions, I call the meeting to a close. Thank you for your attendance.